What's going on, guys? Welcome to the Crypto Friday 5. This week we're going to be discussing FinCEN. What is FinCEN? We're going to be discussing the SEC, CFTC, and IRS, and we're going to be going over Binance. It got hacked. Well, unsuccessfully. So I'll be right back.
All this work is love, reminding us why we do it. All this love is work, it hurts to give yourself to it. All this work is love.
All right, before we get into it, hit that thumbs up button and consider hitting that subscribe button if you find the information useful and you want some future videos. So let's discuss Bitcoin's price action first. So we started off the week right around 10,300. Met a lot of resistance around just under 12,000, I think 11.7, and we're now sitting at right about 9,500. And my take on this is that we're going to see a lot of resistance at these higher levels until we see some regulation coming in from the United States, China, the EU. It's highly speculative right now, and it's unregulated, and people are scared. So until those things are solved, we're going to see a lot of resistance. The first article we're going to get into is FinCEN, which is in the same vein as the CFTC and the SEC. They're trying to push through some regulation. Okay, so FinCEN is trying to regulate cryptocurrencies, the SEC is, and the CFTC is, as well as the IRS. So a little quote here is, a developer that sells convertible virtual currencies, including in the form of ICO coins or tokens, in exchange for another type of value that substitutes for currency, is a money transmitter and must comply. So basically what this article is saying is that you have to go through all the KYC and AML specifications and obligations, similar to what a bank would go through if you're a transmitter of money and if you're using basically any of the cryptocurrency exchanges. Now, my understanding is that this is not something that has gone through yet, but this is just them presenting the idea to try to push this legislation through. All right, moving to the second article today. This is from Forbes, and it's discussing Binance, the Binance exchange. It was hacked this week, and apparently, I don't understand the full technicals of this. Most people probably don't, otherwise there'd be more people pulling these types of things off, but bots got triggered on Binance, liquidated a bunch of accounts, and they all bought one specific coin, which was VIA coin, and it went up like 12,000%. But Binance immediately recognized that the trades were not normal, and they paused all accounts and they withheld withdrawals, so you could not withdraw from Binance for at least 24 hours, and they basically figured out who it was. And I'll leave a link in the description below to a video where someone explains it a little bit better than I can and understands it a little more. But the things to take away from this is that all funds are safe, and there was a huge dump in price after this, but it's not clear that the Binance hack was the cause of this FUD, which is fear, uncertainty, and doubt. This has become very common in the cryptocurrency space. So, big news comes out and there's a huge spike, or there's a hack and there's a huge decline or sell-off. So it's extremely volatile, and it's very, very much news driven. And the CEO of Binance said on Twitter that everything is okay. All the funds have been given back to the people that were negatively affected by this, and the people who tried to withdraw the funds couldn't even do it. So it was an unsuccessful attempt. All right, so what's the lessons to be learned here? Don't freak out when you see news like this. Look into it, go hit Twitter up and, find the Binance related Twitter accounts. Go to the websites, go to CoinDesk, or Google what's going on. Figure out, read a couple articles and figure it out. So don't freak out, because this ended up not being a big deal, And these exchanges have protocols in place in case something like this happens. So you don't need to worry that much. But the second lesson is, if you really don't want to worry about it, get your coins off the exchanges, okay? Pick up a TREZOR or a Ledger. I have links in the description below. and you can pick those up and get the coins off the exchange. And I'll make a video at some point that will show you exactly how to set the TREZOR and the ledger up so that you can do that. The third article we're going to get into today is about the CFTC. So cryptos are commodities, rules a US judge in CFTC case. And there's a little quote here. Virtual currencies are goods exchanged in a market for a uniform quality and value. They fall well within the common definition of commodity, the judge wrote in the order on Tuesday. So the CFTC says that they're commodities. The SEC says that they are securities. The IRS says it's property, calls cryptocurrencies properties or defines them that way. So they're all fighting for different definitions so that they can all get in there and try to regulate it and get their hands on it. So what can we take away from this? Governments, banks, agencies are keeping a very close eye on cryptocurrencies, and it's no longer under the radar. Regulation is imminent at this point. I mean, I think that that's very clear that it's on the radar, and we just have to wait and see how it plays out. As regulation comes into play, I believe that people will start to value, the market's going to move towards privacy coins and decentralized exchanges. And, you know, this is just my guess on what's going to happen, because as the privacy of these cryptocurrencies gets taken away, people are going to value the privacy more. But until then, we're just going to have to wait and see. All right, moving on to the final bit of news. Coinbase announces that they are starting an index fund, which is pretty cool, and I think that this is very good news. This opens up a market for a new class of investor, so someone with like $10,000 or more that wants to buy into cryptocurrencies but doesn't want to deal with the hassle of managing them, the security, or just understanding the necessary technical skills to be able to, you know, buy, trade, sell, reallocate your portfolio, do all this stuff. So Coinbase is basically offering an index fund for their coins on their site. So that's 4 coins, and they're going to be adding more during the year over 2018. So I'm sure that those will be added into the index fund. This is not an ETF, and Coinbase will be charging a 2% management fee. So is it bad or good? And I would say that this is generally a good thing. It opens up investments from a whole different class of investor, someone who's truly passive investor, but is willing to put up cash and wants the sweat, you know, and wants the exposure to cryptocurrencies in their portfolio. So some final thoughts here. It seems like we're in a bit of a sideways, slightly negative phase of Bitcoin, where the price isn't necessarily going up, and we had a huge bull run. So there's a lot of negative feelings going on right now. People trying to like understand how something, how so much money can move in and out of this market. There's a lot of movement that's bubbling under the surface. A lot of companies are implementing blockchain technology and testing blockchain technology. That includes governments and banks. So it is happening, and I just want you guys to keep that in mind. It's like, even if it seems like nothing's going on right now, there's a lot going on under the surface, and at some point in the near future, it's going to explode. And I'll leave you guys with that. So remember, hit the thumbs up button or hit the subscribe button if you want more videos in the future, and I will see you guys in the next video. Much love. Peace.
The more I run, the farther away it seems. What is green is always more than a yard away. Art is